Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. The triple talaq bill was passed in the Rajya Sabha last evening. The legislation secured 99 votes in favor compared to 84 that opposed it. Many opposition parties abstained from vote. US President Donald Trump has again accused China of not doing enough in terms of purchasing agricultural goods from the US. This comes after both nations resumed trade talks in Shanghai yesterday. The Reserve Bank of India has eased guidelines on the end use of funds raised via external commercial borrowings, giving companies more leeway in utilizing funds raised through overseas borrowing. A contingency provision of 994 crore led to Axis Bank's net profit missing estimates in the June quarter. Asset quality remained stable, however. And Tata Motors is looking for partners for its British arm Jaguar Land Rover in order to lower the financial burden of capital expenditure during the ongoing sales slowdown. Let's talk about the US markets now. They fell for a second day in a row after rising pessimism arising due to the lack of a trade deal between the US and China, and mixed corporate earnings weighed on sentiment. Meanwhile, investors will now await the decision from the US Federal Reserve later tonight, something that experts believe is already priced in. Ranita Young of Bloomberg News gets you the wrap of Tuesday's trading session in this report.
U.S. markets fell for a second straight day on Tuesday during a Federal Reserve meeting week, all happening as the United States and China ramp back up on trade negotiations 3 months after the effort fell apart, and during a week in which we'll still have tons of corporate earnings to come through. The very latest corporate earnings to come through was Under Armour, tumbling during the session after warning about weak sales, but we saw Procter & Gamble and Merck gaining on strong results, and then we saw tech shares sliding during the session as Apple anticipated its own earnings, which dragged on a lot of the markets today. Meanwhile, we did see treasuries and commodities, some commodities, the precious metals specifically, gaining ahead of the Federal Reserve meeting. The reason why precious metals are gaining is because they're often seen as safe havens and where investors go to store the value of their assets. So no surprise that they got a little bit of a bid, gold and silver to be exact, today. And we saw that the U.S. dollar was climbing versus major currency competitors. And that's a look at your Tuesday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
So the risk of sentiment from the U.S. market seems to be heading over to Asia as well this morning. Let's take a closer look at those markets. Stephen Engel of Bloomberg News is joining us live from the Bloomberg studios in Hong Kong. Good morning, Stephen. How's it looking this morning?
Good morning. Yeah, it looks like there's a lot of red on my screen. That means markets are down. Every single major benchmark except for New Zealand is lower. In fact, Hong Kong opening up 1% down. The Korean Kospi also down a full 1%. The tone is not very good right now between China and the United States as they restart those trade talks in Shanghai. Trump kind of set the tone by saying that China continues to rip off the U.S. and says the problem is that the Chinese just don't come through on promises. So that did not set the mood very well in Shanghai. But in addition to trade, investors are also focused on a number of key events this week. Today is a big news day, I have to tell you, here in Hong Kong. We, of course, are looking forward to that possible rate cut from the Fed. Key U.S. jobs reports coming Friday, then a slew of corporate earnings. Samsung Electronics, the latest this morning out of South Korea, reporting net income that beat forecasts. Samsung signaled optimism about improvements for the rest of the year for the memory chip business, its most profitable part of the chip division. Of course, Samsung is the world's largest maker of memory chips and smartphones, and it's navigating through that disrupted global supply chain from the U.S.-China trade war and Japan's new export restrictions on key chip materials. Samsung Electronics, though, a key component in the Kospi index in Seoul, is down a full 2.7% after those final second quarter results this morning. Meanwhile, Hong Kong continues to be on edge after another evening of standoffs between protesters and police. This as the White House says it is monitoring what a senior administration official says is a congregation of Chinese forces on the Hong Kong border. Now, a Beijing official on Tuesday said the violence seen in Hong Kong over the past 8 weeks is a creation of the United States. That is a charge the Trump administration has denied. By the way, I might add, finally, Hong Kong is out today, later today, this afternoon, with second quarter GDP figures, and Chief Executive Carrie Lam, well, she says there's no room for optimism. A very busy Wednesday here in Hong Kong. Back to you.
Absolutely. Thanks so much for that, Stephen. Let's talk about one of the points that Stephen mentioned, which is the talks between the U.S. and China. U.S. President Donald Trump resumed his China bashing as trade talks resumed in Shanghai yesterday. He continued to complain about the Chinese reluctance to buy more agricultural products from the U.S. He warned that China will get the worst deal if he is re-elected next year. Derek Wallbank of Bloomberg News brings you more.
The president here is ratcheting up the rhetoric just ahead of these senior level talks in Beijing. Now, the fact that these talks are happening at all was seen as a pretty big sign, right? There had been a lot of standoff and tension. President Trump and Xi Jinping dramatically meet at the G20 in Osaka. Very warm rhetoric that comes out of that. A truce, no additional tariffs coming in, the resumptions of trade talks. And I think that there was some thought in the market that, hey, look, we're really on a great track. We're going to get right where we need to be, and this is going to be the thing that breaks it down. And the problem is that really kind of papers over some of the really stiff differences that China and the U.S. have had at all. So instead of getting into a situation where people are ratcheting up rhetoric and ratcheting up tariffs, where we are now is actually back to where we were before things really got worse, and that is at this real impasse point where China and the U.S. have to sit down and make some real tough decisions about some things that have been keeping them apart. Remember, they had gotten through to the point that there was some sort of framework of the deal under President Trump's telling that he says China walked away from. China says the U.S. sort of didn't do what it was supposed to do. But they had left a lot of the really tricky issues that hadn't necessarily gotten solved. And so that's where we're now back to. And so that's kind of the framework I would put all of this meeting in.
All right, let's see what else is making headlines across the globe. Ritika Gupta of Bloomberg News brings you the first word headlines.
US-China trade talks are back underway after a 2-month hiatus, with officials dining in Shanghai ahead of more formal discussions. The two sides met as President Trump again lashed out at China, saying they don't live up to their word. He posted an angry tweet saying there had been a promise to buy more US farm produce, but there's no apparent progress. He ended by writing, "They just don't come through." The US is again urging Japan and South Korea to resolve their trade differences amid fears the spat could spiral out of control. The White House is calling for what it calls a standstill agreement to give Tokyo and Seoul time to negotiate a wider deal. The comments end weeks of comparative silence from Washington, during which both Japan and Korea sought to bring the US on side. Capital One Financial slumped in U.S. trade after revealing that personal data on its servers from about 100 million people in the U.S. were illegally accessed. Prosecutors accused a Seattle woman of breaking into the bank's cloud system. She was identified by Amazon as one of its former cloud service employees. Capital One said about 6 million people in Canada were also hit by the breach. Now, do you think a robot could convince you to sign up for a credit card? JP Morgan Chase does. It's signed a 5-year contract with AI marketing company Pasado, which uses machine learning to create customized ad campaigns and communication strategies. The deal follows a pilot program where JP Morgan saw its click-through rates on ads jump 450%, with the robot's creative leading the way. Global news, 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
All right, let's turn to the equity markets now. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Well, Agam, unfortunately, it's been the worst July for the equity markets in 17 years. The bad news is that it could well get worse today.
Yeah, very much so, Alex. Of course, let's wait and watch about as to how things are panning out, because results are not really giving us the support that the markets need for now. But that said, we are also looking at a lot of volatility globally, and that's the reason why we are looking at 30% point decline as far as the SGX Nifty is concerned. Now, it was a tough day of trade yesterday. Nifty lost out on the 11,100 mark, and well, a decline of another 100 points. Mid cap and the small cap indices falling, and well, their declines are a little larger than your benchmarks, as is the case for the Nifty Bank and PSU Banking Index down 5%. So there certainly is broad-based selling coming through. When it comes to your ADRs, for now, the picture is not looking that great. We have a lot of weakness at Tata Motors and Vedanta. In terms of the other stocks, also Dr. Reddy's, ICICI Bank and HDFC Bank all declining trade. The Axis Bank global depository receipts are also down as much as 5%. Moving on to your fund flows, again, FIs continue to sell. This time it's to the tune of 645 crores on a net basis. DI is buying stock worth 1,080 odd crores. But again, in terms of contributors, the selling is a little more broad-based. So if you actually leave out something like Reliance Industries, State Bank of India, or IndusInd Bank, we do have a lot of selling in a lot of the other Nifty 50 stocks. Coming down to futures and options, again, there is a little more selling coming through, and unwinding though in the Nifty futures in terms of the Nifty banking futures, and that's where we're looking at a little bit of short build-up. Of course, that index was down as much as 1.7%. But moving on to your open interest distribution, this is of course the 1st August OI, and there's a little more writing around the 11,300 mark. This particular options, pardon me, these options will expire tomorrow. But moving on, where we have seen a little more writing around the 11,200 and 300 calls, as I was suggesting earlier. But let's move on and talk about your India VIX, and that has advanced by as much as 4% to around 13.6. Again, a little bit of a cause for concern. But as far as your other stocks go, we have Cholamandalam, RBL Bank, Bharat Electronics, which is actually seeing a surge in open interest, some weakness in some of those names as well. NIT Technologies, Torrent Power and Tata Chemicals, on the other hand, seeing unwinding. Again, Alex, in the broader markets, there is a lot of weakness. Yesterday, there were hardly a few names, few and far between, which were advancing, and the picture is likely to continue today as well.
Right, thanks so much for that, Agam. All right, let's move on and talk about a big update with regard to the regulatory news. The Reserve Bank of India has eased the end-use restrictions for external commercial borrowings raised by corporates and NBFCs. Vishwanath Nair lists out the relaxations.
The Reserve Bank of India late Tuesday evening eased some of the guidelines with respect to the ECB framework, the external commercial borrowing framework. What the RBI has essentially done is allowed companies to borrow money with minimum maturity of 10 years to be able to pay for working capital needs as well as general corporate needs. It has also allowed NBFCs to raise money with similar maturity to be able to on-lend to companies that might need this money for the specific purposes of working capital as well as general corporate purposes. The RBI has also said that in case a company wants to repay its domestic rupee loans, it would have to raise money with minimum maturity of 7 years. Similarly, NBFCs that want to on-lend to companies that want to settle with their or refinance their debt, the domestic debt, then they would have to also raise 7-year money. One important point that the RBI also mentioned is with respect to companies from the infrastructure as well as the manufacturing sector, which have been classified as non-performing assets or are under the special mention account category, basically accounts which have not repaid their debt for more than 60 days. These companies can go for a one-time settlement with their domestic lenders by using ECB funding. So accordingly, these companies can go abroad, raise money, and then repay their domestic lenders. Banks which have exposures to these companies can also sell the loan exposures that they own to ECB lenders, to eligible ECB lenders. Of course, remember that the eligibility criteria requires that the buyer is not a foreign or an overseas branch of an Indian bank. So it has to be a purely foreign bank that buys some of these loans, foreign bank or foreign lenders. It is important to note that this is being done at a time when Indian banks as well as Indian non-banking finance companies have been struggling to help corporates with their funding requirements, as well as dealing with a large NPA pool which they have not been able to resolve adequately. So an opening up of a foreign funding option will help some of these companies to actually meet their funding requirements and beat whatever liquidity crisis that they might be facing.
Now, the founder of Cafe Coffee Day, VG Siddhartha, remains missing more than 24 hours after he was last seen at a bridge in Mangalore. The Income Tax Department has come out with a detailed explanation after a letter purportedly written by Siddhartha claimed harassment on the part of tax officials. Nishant Sharma brings us more.
Well, the Income Tax Department issued a detailed statement soon after a letter emerged, which is reportedly written by VG Siddhartha, alleging harassment he faced by the income tax officials during an investigation. Now, in the statement, to begin with, the income tax officials are saying that the signature in that letter written by VG Siddhartha does not tally with the signature available with them in the annual reports. On the entire investigation bit, the Income Tax Department stated that the investigation against VG Siddhartha was only carried after credible evidence of financial transaction done by CCD in a concealed manner was unearthed during the search of a prominent political Karnataka leader. During that search, a person with holding a Singapore citizenship was also covered with a cash of about unaccounted cash of about close to 1.2 crores, which he said belonged to VG Siddhartha. When Siddhartha was approached by the tax official, he did, in a sworn statement, accepted an unaccounted income of rupees 362 crores and also accepted an unaccounted income of rupees 118 crores of Coffee Day Enterprises. On the Mindtree issue, the Income Tax Department stated that while they did attach 74.9 lakh shares which belonged of Mindtree, which owned by VG Siddhartha and Coffee Day Enterprises, but it was revoked on February 13 when Siddhartha requested and offered other security of shares of Coffee Day Enterprises. But that was only revoked under the condition that the proceeds of the Mindtree sale will only be used to either repay the loans by opening a separate escrow account, and the remaining balance will be provided for attachment against the tax liability. While close to 3,000 crores from the proceeds of the Mindtree sale was used to repay the loan, only rupees 45 crores was used as the first installment of advance tax against the estimated liability of rupees 300 crores. Now, with this detailed explanatory statement by the income tax official, they've gone into the defensive, and they're saying that, essentially saying that they did everything by the book and acted as per the provision of the Income Tax Act.
Developing story. We'll bring you updates as and when we get them. Do stay tuned to Bloomberg Quint for all the news and updates there. On to earnings now. Tech Mahindra reported numbers after market hours on Tuesday, and they were a miss on most fronts. While profit fell 15%, margins too saw a dip. The management attributed business seasonality to the soft quarter. Agam Vakil spoke to CP Gurnani and Manoj Bhatt of Tech Mahindra and began by asking them about what's causing the delay in the 5G rollout. Listen in.
FY20, we do believe that we will end up doing a few pilots. You heard from us that with a Japan-based customer, we have set up a lab in Japan, we have set up a lab in Bangalore. Yeah. We are right now discussing with another client to set up another lab for use cases. Okay. End of the day, yeah. I mean, if you design a flying car, you need to know what to do with the flying car also. Right? Sure, yeah, yeah. So I think, we are in a current mode of discussing use cases for the enterprises. We are seeing a better demand pattern from enterprises and the use cases than a use case for a consumer. Right. So I do believe FY21 is the year of rollouts. FY20 is more about getting ready for rollouts.
Okay. All right. Manoj, in the press release, you do mention that there's seasonality which plays against margins. And I know that you got this question enough today, but can you please give us a breakup of the contraction today for this particular quarter? And secondly, I was talking to a few analysts before coming here, and they actually wanted to know whether or not there could be recovery in margins, and to what extent could there be worst case scenario?
So first let me what happened this quarter. So the seasonality is because our mobility business, the revenue drops, margins drop, and that was about 100 odd basis points. Our wage hikes were about 100 odd basis points.
and then we had H1B about 50 basis points, and then we had currency around 50 basis points. Our utilization, our investments in trying to be getting ready for some of the deal funnel is the balance about, and I'm explaining an EBIT margin change. So that's about 60, 70 basis points. So that's the loose breakup. Now, when we think of it, and on a full year basis, seasonality vanishes. H1B is one time. Typically, we have recovered the salary hike over a period of time through automation, through productivity. And then that leaves some of the investments we have made on trying to get deal ready and delivery readiness. And that's something which, as the revenue growth accelerates, you should be able to recover. So to me, that's the way I think of it. Now, of course, if new deals come in, that's a different conversation, and as we win new deals. But to me, that's the way we're thinking about it. So we are investing today, keeping in mind what we see in the future.
Let's move on to Axis Bank now. Higher provisioning led to Axis Bank reporting lower than expected profit growth in the first quarter. The private sector lender claims it's a move to a tighter provisioning policy internally in the quarter gone by. Shifali Malik's here with the details.
The numbers for Axis Bank were below expectations when it comes to the bottom line. It came in at about 1370 crore rupees. We were expecting something in excess of about 1800 crore rupees, so way below expectations. But it was mainly on the back of higher provisioning that the bank made during the quarter. The net interest income came in line with the expectations at about 5843 crores. Operationally as well, the numbers were quite healthy, with pre-provisioning operating profit growth coming in at about 35% on a YY basis, which was way above expectations. So coming to the asset quality, the gross NPAs came in at about 5.25%, remaining almost stable on a sequential basis, and net NPAs as well remained stable at about 2.04%. But the bank made contingent provisioning of about 994 crore rupees during the quarter, and also they introduced a process of systemic provisions towards non-fund based facilities and in the stressed accounts outside of NPA. So that led to a one-time provisioning impact of about 459 crore rupees, and bank now holds about 2360 crore rupees of provisions for various contingencies. So on the back of this reason only, the bottom line was slightly below expectations. Their overall provisioning coverage ratio improved to about 78% versus 77% on a sequential basis. Other than that, the business momentum remained strong, with credit growth 13%, deposits growth about 24%. And the management said that the domestic growth conditions remained soft in the quarter, but they do see opportunities that have been created due to the crisis that we've been seeing in the NBFC sector. No concerns on the retail book, but they have seen some negative surprises in the corporate borrowers and have tightened the underwriting standards there when it comes to fresh lending.
All right, inventory loss and lower gross marketing margin on petrol and diesel may hurt Indian Oil's earnings in the first quarter. Somit Sarkar is joining us with the street expectations. Good morning, Somit. What are the key numbers to watch for?
Good morning, Alex. I'll start off with the headline numbers first for Indian Oil Corporation. Obviously, the company's revenue that is expected to be 11% higher, close to 1,40,000 crore rupees. The EBITDA is expected to fall by nearly 47% to close to 5,800 crore rupees. The margins are expected to come in at close to 4.1%, while the net profit is expected to fall by nearly 61% to close to 2,370 crore rupees compared to last quarter. Now, the gross refining margin that is expected to come in at around $2.9 per barrel for Indian Oil Corporation versus $4.1 per barrel reported by the company in the last quarter. Now, it is expected to be a weak quarter for the company because of inventory losses and sequentially lower gross marketing margin on auto fuels, that is petrol and diesel. Now, Brent crude, now that averaged around $68.52 per barrel versus $63.7 per barrel in the last quarter. Now, though Brent crude has averaged higher in the first quarter of financial year 2020, in a a time period of nearly 12 days, it had dropped nearly 20%. And because of this sharp drop in crude prices, the Indian Oil Corporation might report an inventory loss in the first quarter. And along with that, if you see on the marketing segment, the gross marketing margin earned on every liter of petrol and diesel, now that fell to nearly 1.9 rupees per litre and 3.3 rupees per litre from close to 5.85 rupees per litre that the company earned in the last quarter. Now this was because of election period that the company was not able to increase their gross marketing margin, and this could impact the company's marketing segment in the first quarter. Now the petrochemical business, now that EBITDA is expected to be a decline because of lower product spreads. Now those Singapore gross refining margin, now that averaged higher at around $3.5 per barrel. The Indian Oil Corporation's gross refining margin is expected to come in lower because of inventory losses. On the operational side, the crude throughput that is expected to be high by nearly 2% to close to 17.7 million metric tons, while the sales are also expected to be high by nearly 1.7% to close to 22 million metric tons. Now, the key things to watch out for from Indian Oil Corporation earnings would include gross refining margins and marketing margin outlook that the management gives. Along with that, any inventory on foreign exchange gains, the petrochemical performance in this quarter, and the gross debt number and the subsidy dues from the government would be important to watch out for from Indian Oil Corporation earnings today.
All right, thanks so much for that, Somit. Well, I do want to address breaking news at this point. We have confirmation. It has been reported that VG Siddhartha, the chairman of the CCD group, his body has been found. Remember, he went missing on Monday evening, and this was reported apparently by his driver, who drove him to a bridge on the Netravati River in Mangalore. He went missing shortly after that and was only found today. Of course, we addressed the concerns that were raised with regard to the letter that was left behind by VG Siddhartha, allegations being responded to by the Income Tax Department. Of course, we'll bring you all the news and updates as they emerge in this case. Do stay tuned, of course, to Bloomberg Quint. For now, let's turn to the next update, which is the UPL earnings. Revenue growth may have inched higher in the June quarter after incorporating Arista with itself. Yash Upadhyay will tell us some of the key factors to watch out for. Yash?
So UPL is expected to come out with a steady set of numbers for the first quarter, but do keep in mind the numbers would not be comparable on a year-on-year basis on account of Arista financials being incorporated this time around as well. But coming straight to the headline numbers, revenues are seen rising from 4,100 crores to 7,732 crore rupees in the first quarter. EBITDA is seen at about 1,574 crore rupees versus 847 crores in the same quarter last year. Margins are expected to be largely stable around the 20.5% mark, while net profit is seen marginally lower at around 507 crores versus 510 crores. Now, the key factors to watch out for is the revenue growth in the core business, which is UPL, excluding Arista, and that is seen in the range of 8 to 10%, with some of the brokerages even indicating that number could be higher by around 11 or 12% as well. This would be on the back of strong performance in Europe as well as Latin America, where growth is expected to be in the mid double digits segment. Delay in sowing in India as well as a weak performance in the North American market is expected to keep growth restricted for these two segments, which in fact account for the highest in terms of the percentage revenue for the company. However, a stronger rupee, that would mean that the forex gain would be limited this time around, which will keep margins also steady on a year-on-year basis. Do watch out for any one-offs, because there was a higher other income in the base quarter for the company, as well as Arista integration related costs. So on account of that, the bottom line will be appearing slightly lower, but take out those adjustments and the bottom line at around 507 crore rupees would mean a steady growth in the bottom line as well for UPL.
All right, let's turn to the stocks in news now. Mishika Parak is joining us now to tell you all about the stocks in news. Good morning, Mishika. What do you have for us?
Good morning, Alex. Let's first look at the first set of numbers, quarterly results coming in from Dish TV. Now, these are a weak set of numbers. Their revenues were impacted because of weak subscription numbers. EBITDA was ahead due to lower than expected employee costs, and the reported margins were inflated due to an accounting change. SL Group deleveraging may be a key trigger for the stock as per analysts. Then we have Gujarat Gas. They came in with strong results. A higher Morbi volumes drive record earnings for the company. The National Green Tribunal has banned use of coal-based gasifiers at Morbi in March, and higher volumes and lower gas costs aided the margins. Let's look at the US FDA inspections. Dr. Reddy's lab received Form 483 with 5 observations for its Unit 2 lab in Andhra Pradesh, and Alchem lab received Form 483 with 4 observations for its manufacturing facility at Baddi. Lastly, let's have a look at the important bulk deal. DHFL has completed the sale of 30.6% stake in Avans Financial Services to Warburg Pincus.
Thanks so much for that, Mishika. Now, the much debated and politically contentious Triple Talaq bill cleared the Rajya Sabha hurdle yesterday evening. The government took advantage of opposition members abstaining from voting and managed to get the resolution passed with 99 votes against and 84 votes. This happened amid heated debate in the upper house. Take a look.
Result of the division on adoption of the motion that the bill be passed. Subject to correction, ayes 99, noes 84. The motion that the bill will be passed is adopted.
ये राजनीति से पूरा प्रेरित है, पॉलिटिकली मोटिवेटेड है। ये आपने इस देश के अल्पसंख्यकों को उनके आपसी झगड़े लड़ाई में लगे रहे। वकील पति के खिलाफ करेगा, पत्नी पति के वकील खिलाफ करेगा। जो अगर कहीं एक जमीन का टुकड़ा होगा, घर का टुकड़ा होगा, वो बेच के वकील लगेंगे। और इससे पहले कि उसकी जेल की मुद्दत खत्म हो गई होगी, तब तक उनका दिवालिया निकला होगा, बीवी भी सड़क पर होगी, बच्चे भी सड़क पे होंगे, और जो जेल से निकल आएगा या तो खुदकशी करेगा, या डाकू बनेगा, या चोर बनेगा, या भीख मांगेगा। ये है मंशा आपके ट्रिपल तलाक की।
55 का कानून आपने लाया, आपका अभिनंदन। 61 का डाउरी प्रोहिबिशन आपने लाया, आपका अभिनंदन। 498 है, आपने लाया, आपका अभिनंदन। तो इतने प्रगतिशील काम करने वाले गुलाम नबी आजाद, आपकी पार्टी और आपकी सरकार 1986 में शाहबानों के मामले में आपके कदम क्यों हिले लगते हैं? ये हैं बड़े सवाल। 400 से ऊंची ऊंचाई से उठे आप, 86 में शाहबानों लाए और उसके बाद से आपको बहुमत नहीं आया। आई एम गिविंग अ फूड फॉर थॉट फॉर यू, काइंडली थिंक।
Ayes 84, noes 100. The amendment for reference of the bill to Select Committee is negatived.
All right, let's take you through some of the stories that you'll find if you look up the website bloombergquint.com. First up, the Comptroller and Auditor General of India has highlighted that the Income Tax Department allowed tax exemption claims for agricultural income without proper verification in some cases. In its audit report on direct taxes for financial year ended March 2018, it audited 6,778 cases and found that the tax department allowed tax exemption claims for agriculture income in 1,527 cases without adequate documentation and verification of supporting documents. Tata Motors' UK-based subsidiary Jaguar Land Rover is looking for partnerships to handle large capital expenditure, according to Chairman N. Chandrasekaran. At the Tata Motors annual general meeting, he said JLR couldn't stop investing on research and development, but it is evaluating opportunities to create partnerships that would reduce the burden on the company during the ongoing demand slowdown. That's all you need to know at the start of trade, but do stay tuned for all the news and updates. Do log on to Bloomberg Quint.